Hey, what's up, guys? Good morning and happy Wednesday. Let's do a quick sound check here in the Essentials room and then over on YouTube. Hey, Mirza, hey, Lorna, Andrew, Savvy Trader, Russ, Claudia, Peter. All right, good morning to all. All right, guys, so first chart of the morning is the Dixie here, the dollar. And the dollar is becoming more and more of a problem for the bulls. So we have buy signals on the daily chart down to the 5-minute. Whole lot of buy signals. And then as of yesterday, price is back above that daily 200 SMA. So the signals improve, the structure improves. And now through that 200, this thing might be let off the leash here. So again, strength in your dollar, not the greatest thing for the bulls. And the other thing that's not great for the bulls, we check out the NQ here, the QQQ futures. Today's going to be day 3 of a 1, 2, 3. Yeah, today's day 3 of a daily sell signal. And then to make matters a little bit worse, we've actually lost to the weekly buy signal. Weekly chart goes from bullish to neutral, telling us, if anything, things are a little bit tired here. And then your daily chart cranks out the sell signal. So now we're at the point where momentum-wise, structure-wise, there's really nothing telling us to buy the dip from a weekly chart all the way down to a 5-minute. And then the S&P futures here, they have joined the exclusive club this morning, as this weekly chart also goes neutral. And then the daily chart has the first daily sell signal since, I want to say, March. First daily sell signal since, March. So things we really shouldn't ignore. May, June, July, your weekly chart is bullish. The daily chart is bullish. You know, that really makes getting long and buying the dip, trading those squeezes to the upside, definitely makes that game pretty easy. Now, until things change, the game is kind of shifted. Back there with all those buy signals, you're trying to get long inside the squeeze. You're trying to buy a dip to a 21 EMA. Now with the daily sell signal, the game plan it's the same game plan, just opposite direction. With buy signals, we're trying to buy the dip into the 21. With the sell signal, ideally, you're trying to short the bounce into that 21. And we are seeing a lot of names out there that have new daily sell signals. The semiconductors got a few last week. So they've taken a turn for the worst. XLK's got some daily sell signals. And mind you, that was your leadership from April, May, June, all the way through July. A lot of that strength in the market was your tech stocks and your semiconductors. XLK's got the sell signal. Netflix is the proud owner of a brand new daily sell signal. And you got the Apples, the Teslas, etc. So we'll see what's up tomorrow. Tonight, actually. Tonight we have Nvidia earnings. And that's pretty much it, guys, as far as the big boy stocks go. Nvidia's kind of the last of the bunch. So we'll see what happens there. The one issue that I'm seeing in Nvidia for now, they've taken it from 400 to 480, which is definitely nothing to sneeze at. Really nice move. But notice how they haven't fixed the issue down here in momentum. With the exception of a few days, momentum's pretty much been under the zero line since early July. So with the exception of a few days there, you've had price trying to go higher. All right, trying to break out. doing that without the wind at its back. So if Tesla's going to be the name, or Nvidia here, if Nvidia is going to be the name to quote unquote save the market, in order for us to get any kind of sustainable move out of it, they have to shift momentum. If they can't get momentum back above the zero line, there's a better chance a breakout fails. Kind of like you saw yesterday. Everyone's looking for the breakout above 480. They open it above 480, and then they dump it. So the biggest thing I would look for tomorrow after earnings, even if we do gap up, is are they getting closer to that positive shift? Then Nvidia might actually have something to work with. If they pop it, they bounce it, but they never quite get that shift, never refill the gas tank for the bulls, not too sure we can trust it. So my thinking for now, guys, is still the same. Until things change, and unless things change, the initial target for a short here is a move down to the weekly 21. So that puts the SPX down at 43.25, call it. And that puts your Q down around 350-ish. So unless things change in the signals, I think bounces here are shorting opportunities. And one name that we got short yesterday, which we had already shorted last week, was AMD. So I think a big part of moving your account forward, you're trying to make as much as possible on your best setups. If we go through the scans here this morning, as far as a short, right now AMD is my best setup. So in terms of maximizing your best setup, take a daily squeeze, for example. There's going to be times where, say, you get short up here. You catch the initial flush, you take your profit, and then maybe a few days later, AMD bounces. And lo and behold, the signal is still valid. You caught a good flush, it bounced. Now it's right back in the daily squeeze, right back near the entry zone. So the idea of still seeing that daily squeeze fire short, totally valid. And now I can look at it with a little bit of house money, so to say. We got short last week, caught the flush. We made like 50-ish% on our debit spread. So yesterday what we did was the one potential red flag in terms of getting short AMD could be Nvidia earnings. So potentially Nvidia just, slams it out of the park tonight, and they do the whole forward guidance thing, all that good stuff. Who knows? Nvidia could gap up, and so could AMD. So risk versus reward wise, we took a small chunk of what we made from last week's trade. Like for easy math, here's what I did. Say I made $5,000 in that first flush. What I did for yesterday's trade was take 20% of that. So I'm taking $1,000, and we bought the 100 strike puts that expire next Friday. Got some of them out the money bad boys, right? And now the thinking is if AMD again dumps, now we're in a position to make some more money on one of our best setups. But we're doing that in a fashion where we're only risking a small chunk of the profits that we made last week, when we didn't have to so much dance around Nvidia earnings. So now worst case scenario, AMD gaps up to 150 tomorrow. I'm going to lose that $1,000 that I have in those 100 puts. But between the two trades, I'm going to walk away with a net profit of $4,000. So I think an example of trying to maximize your best setup. Get a good entry, catch a flush to your target, take home the paycheck, and then you get another chance to re-short on the bounce. Now you can be a bit more aggressive with your strategy selection. Back here, we're doing an at-the-money debit spread. Yesterday, we're buying puts that are, $7 out the money. But I'm doing that with a small chunk of my profits. So now it's one of those things where next couple of days here, AMD works down to that $97-ish target. Now I've got a really big trade on my hands. The trade goes to zero. I'm giving back a percentage of what I made on the original trade. So now we can see here this afternoon, we can sit through Nvidia earnings really without sweating it too much. No matter what happens tomorrow, we've got a net profit. So I do like AMD for a flush down towards, eventually maybe the daily 50. But I think $100, $98, that ought to do it for now. And then let's see, what else do we like in here on the short side? We've been watching Twilio. The only tricky thing here is that daily 200. It's got the fixins for a short. The 200's doing a pretty good job of keeping it afloat for now. So we're watching Twilio, we're watching some S-Gen. S-Gen's not too bad. And then for some potential longs, which admittedly I don't have too much interest in, but they're all over there in the energy stocks. All the green is over in energy. So XLE looks pretty good. COP looks pretty solid. Actually, COP went neutral. A little bit less solid. Oxy went neutral as well. LNG. Yeah, LNG is pretty solid. And then I think FANG. Yeah, FANG's neutral as well. If you're looking for a long, I think you got it maybe in energy. But I think the easier trade for now is just short and bounces. Get a bounce and short it. But all right, guys, that's what I got for you. My best pick for now would be AMD. Biggest thing to be mindful of here until tomorrow is Nvidia earnings tonight. Great setup, though. So we'll see if earnings can rain on that parade. All right, S&P futures, NQ. Everything pretty quiet this morning. The calm before the storm. So, Sebastian, to change the color of the neutral bars, just go to the indicator settings for the signals. And then if you click on the global tab, the globals, then you can change neutral. Default, it's gray. I'm liking blue, though. The whole shift from bullish or bearish, or the shift from bullish to neutral, rather, or bearish to neutral, does pop a little bit more. So indicator settings and then the globals tab. The shift from bullish to neutral, in one way that says, hey, chill out. All right, time to stop getting long. And that's the day we stop getting long. Or the day after. So it keeps you from giving back a lot of those profits when you have that trend with those buy signals. I think more importantly, though, it's kind of a heads up that, all right, not only have the bulls kind of gotten tired here, now they're vulnerable. If they're vulnerable, you're kind of looking for the bears to strike. Hey, what's up, Ethan? Yeah, so AutoZone here. I like it. I had a problem with it. I'm trying to remember what the problem was, but I do like the setup. The options don't seem too bad. Not the tightest spreads, but we've definitely seen worse. Oh, you know what it was? As far as a short goes, it's totally valid. As far as like a mastery trade, it's a little bit pricey. The trade I would typically like to do, just buy the in the money put. That's 5,000 or 6,000 buckaroos. And then even the debit spread. So as far as a group trade where, it's kind of appropriate for all the count sizes, AutoZone a little bit tough. As far as a valid short, really solid. You have the nested squeeze setup. The 3-day, the 2-day, and the daily. All spitting out that bear squeeze. I like it for a short. Jesus, T-Mobile. Yeah, I like it. Now, small little details. Technically, we're still in the entry zone. So price isn't so far from the 21 that an entry today is not valid. But if we can catch it a little closer to 137-ish and then short it, just a little bit juicier. But yeah, if they can take out 134, you should see the daily squeeze break short. And then Brian wants to check out some Johnson and Johnson. It's just the wrong market for that setup. What happened to Johnson and Johnson was it kind of became a lone wolf. We had the squeeze signal, right? Everything lined up for a big push. However, the S&Ps not really giving Johnson & Johnson too much wind at its back. And then to take it a step further, healthcare. Healthcare is not going to brand new all-time highs in a hurry either. But I don't think it's a Johnson & Johnson thing any more than it's a First Solar thing. First Solar also had potential, and then it crapped. Monster had potential, kind of stuck in the mud. BK had potential, got dumped. And notice, guys, these aren't just daily squeezes that, all right, the buy signal turns off and it just kind of chops. These are names that are going from the ideal conditions for a push higher to very quickly almost a total opposite. So it's not that the setups to the upside have been failing. They have been failing, but it's more so the fashion in which they've been doing that. They go from pumping out the buy signal to nasty pretty quick. Happened to BP. Going nowhere. It happened to BTU. Happened to UNG. Now we'll see if it's the case again with energy. Keep that in mind. Energy hasn't proved anything. We have the signals that could turn to a nice move, but no proof of that just yet. If you find Johnson & Johnson back there in the squeeze or the buy signals, and then at the same time XLV, looks just as good. And then at the same time, the small caps look just as good. The Dow looks just as good. S&Ps look just as good. Then I think you get long Johnson & Johnson, and I think you do it aggressively. You get the whole sector and the whole market behind you. Not the case for now, so there's a better probability things just fail. Where those daily squeezes should work better for now, be on the short side. Starbucks would have been a great trade, and you're shorting Starbucks in alignment with the market. Market says, yeah, we're in full support of things getting spanked. NET would have been a great squeeze trade for a flush down to that 20, down towards that 200. We hit McDonald's. McDonald's was a nice short. Now, if you were looking for trades like McDonald's back in May, June, July, they wouldn't have worked. If you were looking for things like Starbucks back in May, June, July, they wouldn't have worked. Wrong market environment to try to get short in a daily squeeze. And this is what the market looks like. Everything's kind of flipped now. So caution to the upside. Caution to the upside. So Claudia, if you're getting an error on your watch list, that might mean you have too many names in there. And there might be a chance that the watch list I gave you guys, there might be a few too many. So maybe try deleting 3 or 4. 3 or 4 names you wouldn't tend to find yourself really interested in. And then see if that corrects that issue. Appendra, let's look at LI. I don't see too much to do here on LI for now. I don't have a buy signal. I don't have a sell signal. So a little patience warranted on that one. Double P wants to look at ExxonMobil. It's just more of the same. Flashes the squeeze signal. And then the next day, the squeeze signal disappears. Just kind of stuck. Yeah, Andrew, I agree as well as far as the blue being easier to see. Now, if y'all were in my office and we switched it back to gray, if you're sitting here with me, it's easier to see than it is on the recording or on the screen share. Easier indeed. All right, folks on YouTube, let me see if you got any questions over there. My man, God's Will, NTNX. What's up, man? Ooh, nice move. Yeah, this thing's beautiful, man. The only problem is I'm a couple days too late. Would have wanted to get it near the 21 EMA. And now here's the beauty of that. The squeeze hasn't even fired. So the party actually hasn't even started yet. But if I could have picked it up back here, I'm already sitting in a profit. I think that's the best position to be in. We've bought our calls, we've bought our puts. And before the squeeze fires, we've already got some nice profit cushion. Then by the time the squeeze fires, now we have an outsized gain. So really, really good quality setup here. 4-hour, 2-hour, 1-hour, and a 30-minute buy signal. Yeah, kind of wish I saw that at $30. Very good stuff. Very good stuff. And then Walmart. So for Walmart here, just kind of playing the probabilities game. With the current daily squeeze here, as long as momentum is under the 0 line, and then as long as price is under the 21 EMA and the 50, there's a better chance that squeeze fire is short, as opposed to that squeeze. They got momentum back above the 0 line, price above the 50, price above the 21, and ultimately that squeeze fired long. So things to watch there on the big Walmart. Hey, what's up, Alexis? Oracle. So Oracle reminds me a lot of AMD and AI. So check out AI here. AI had a really nice push, pulls back to the buy zone, chops around for a bit, and you had a brand new daily squeeze. Now, given that the move that took you into that daily squeeze was really bullish, the tendency a lot of times is to think, all right, that daily squeeze should fire long. Should fire long, should give you continuation of the move that brought it here. The first problem with that, momentum. You have the squeeze, and the squeeze tells us, hey, at some point here, this thing's probably gearing up for a nice move. When momentum is below the 0 line, remember, trading is just a probabilities game. Momentum under the 0 line, better probability the squeeze either just chops endlessly or eventually turns and breaks short. So you saw that with AI. We saw that with Apple. Daily squeeze prints. Momentum under the 0 line, eventually squeeze breaks short. And we're seeing something similar, I think, right now in AMD. Here comes your squeeze, momentum, negative, negative, negative. If they can't quickly fix that, better chance the squeeze breaks short. So same thing here for Oracle. If they can rip that back above the 0 line, kind of like they did back here and back here, then the Bulls have a much better chance. If not, it could be choppy or eventually break short. Greg, you like the blue better? I'm with you. I'm with you as well. Cole, JP Morgan or gold? We'll take a look at both. Let's see, JP Morgan. So that squeeze fired short last week. And there's another example. Squeeze prints. Momentum breaks under the 0 line. Better chance of squeeze fire short. The one thing they've got for now, they still have a weekly buy signal, which means if they were to test support around 145, initially you do look for that to hold. But the problem is, I would have told you the same thing about Apple. And Apple did not hold. Nor did Tesla initially. And then gold. So it's a weird thing. So notice how gold has the Gold had the monthly squeeze, and that squeeze officially fired long back in June, or back in July, rather. So this is month 2 of the squeeze, quote unquote, firing to the upside. Now, if you called me and said, hey, T, not sure if you've seen it, but gold fired a monthly squeeze long 2 months ago, I'm thinking the chart looks something like this. Squeeze fire, that usually means we're taking out the highs and pushing. So they go from the buildup of energy to the release of energy. The first 2 months of the release of energy, they're not doing anything with it. And interestingly enough, that kind of seems to be gold's MO. Here we go. We got a monthly squeeze and a buy signal, and it never fires long. Here we go. We got a monthly squeeze and a sell signal, and it never fires short. Here we go again. Monthly squeeze, monthly buy signal, and we're just kind of chopping. But across any time frame, if the squeeze is already fired, and you're not getting that directional move out of it, to me, it's kind of a warning sign, so to say. And then the other issue here for gold in the short term, as of Monday, the weekly squeeze officially fires short. Momentum broke. You got the blue bars or the blue dots, and now we got the gray dot. So we have a monthly squeeze that's not really working as advertised. We have a weekly chart firing a squeeze short. We have a daily chart printing sell signals under the daily 200. Granted, I don't trade gold. But if I were looking at any other product, wouldn't be something that I'm seeing as an opportunity for a long just yet. All right, guys, little Papa ruin the futures here. The pops that we've seen up to this point, they don't really change anything. And you got to be careful about getting long into these pops when they don't fix anything. They don't shift momentum. They don't rebuild the structure. Just kind of bouncing for the sake of bouncing. Hey, good morning, Ivan. Yeah, thanks for all the greetings here, guys. Raising Cane. You know, I never tried Raising Cane. Does a big 3 squeeze work with the 1 minute? Yeah, it definitely works on the 1 minute. Now, I think like with any other indicator, the lower the time frame, one, obviously the faster things are, and then two, the more room there is for noise. But the last squeeze signal we had here on the 1 minute would have been back here, and that had you on the right side of that 1 minute squeeze. A couple nice shorts in here. But if you're used to trading the 1 minute chart, then you're used to the speed. So that'd be nothing new for you as far as the velocity of it all. Damn, yeah, a couple of nice shorts here. A couple of nice shorts. Yeah, my pleasure. My pleasure. Kevin, Nike. Well, for those that don't know, today is Kobe Bryant's birthday. That's my idol. So I'm pretty sure that Nike released the brand new Kobe's today. They haven't sold any Kobe gear since he passed away. So Nike will be getting a couple $100 out of me later today. We'll see if that can pump the stock price or not. And they're gonna gap down about $4. Really? On Kobe Day? That's just wrong. Yeah, Nike's pretty cooked here. And there's more room for downside, given that there's actually a lot more room for downside. The daily squeeze just fired short on Monday. So that party just started. But then check out the 2-day squeeze. Hasn't fired short just yet. If it does, it's going to trigger a bigger move. Or a good chance it'll trigger a bigger move. And then the 3-day squeeze. Now with price so far from the daily 21, my preference would be short after the next rally. All right, guys, a couple more here, and then I shall let you go. See what today brings. No, Nihan, we took off ADI on the 3rd of August. Signals changed on the 3rd of August, so we dished it that day. And ideally, that's what I want my losing trades to look like. Buy it up here, and then take it off right there. Not under the 50, not when the squeeze breaks short, not 20 points lower at the 200. August 3rd, we lost our buy signal. The A+ label went gray. We ditched it. All right, guys, a few more here. Lulu, PSTG, and then Generac. All right, Lulu. Reminds me of Oracle, AI, Apple, AMD. Where you've had the daily squeeze for a little bit longer than a month. At no point have they shifted momentum above the 0 line. So it's a little bit like the daily squeeze you had back here. We're squeezing. Momentum not really on board with that squeeze firing long. Doesn't mean this fire is short. Just means until it turns positive, there's a better chance it just continues to trade sideways. Or eventually turns and does break short. And then PSTG. Same thing here for PSTG. Right, they're trying to get it going. Momentum not on board just yet. And then last one of the morning here, guys, will be Generac. There's been a lot of chatter about Generac in the options room, over in the gold room over the last week or so. As far as my indicators go, it looks like a short. And I say that because if I flipped it upside down and we looked at the inverse chart, mind you, I'm just speaking through the lens of my indicators. All right, not my opinion, just what my indicators say I should do. So the inverse chart of Generac says, hey, we went bullish. We're pulling back to the buy zone. Structure still checks out. Momentum still checks out. You're kind of looking for the dip buy off of support. But that just means I have to look at the real Generac and say, all right, squeeze broke short. With that came a brand new daily sell signal. And now this is the first bounce back towards that falling 21. If I would buy the dip on the inverse chart, I would be thinking short the bounce on the real deal. The real deal, Holyfield. Yeah, and for sure, right? Things like seasonality, hurricane season. From my point of view, though, if Generac was gearing up for a really meaningful move, It'd probably look something like it looked back here. Momentum supports a big move higher. Structure supports a big move higher. The signals support a big move higher. The squeeze supports a big move higher. Where's all of that right now? Do we have momentum? No. Do we have structure for a push higher? No. A buy signal? No. A squeeze? No. And keep in mind, everybody knows hurricane season's coming up. Right? A lot of folks are privy to that kind of insider information. Now, where I think it gets interesting would be a daily close back above 120 that sees them canceling that daily sell signal. Let's rebuild a little structure. Let's get it back above that 21 EMA. And now they might work on squeezing everybody who got short down here. But until that happens, it's kind of like you're looking at the inverse chart saying, well, hurricane season is coming up. Hurricane season is no good. So I'm going to short it right here. Momentum says be careful getting short. Structure says be careful getting short. So things to consider. But all right, y'all, I got to go catch a quick appointment and then get back home for some trading. So for those of y'all in my mastery for AMD here, y'all know the drill. And then we'll see if Nvidia can save the market tonight. No pressure. No pressure. But all right, everyone, thank you for your time this morning. Always appreciate y'all being here. Hope you all have an awesome day, and I'll talk to you soon. Adios.